Back to aluminum, if it's of interest, I think this is one of the most unique stories in the metal space at this point in time. Um, if you're a buyer or if you're looking at charts and you're just following charts, you're saying, okay, well, these inventory levels in the warehouses, the amount of physical aluminum in the world is at the highest level it's ever been. Why is my pricing not coming down? What's the deal? LME pricing is down, but I'm not able to get what I consider a fair price, or I'm just buying on spot and seeing what happens. Right now, 3 firms, financial firms, that I won't name names, have tied up 75% of the aluminum material. This also applies for zinc and for lead in London Metals Exchange warehouses. The main warehouses, I mean, you have one in Detroit, you have one in Vlissingen, around the world, as a part of financing deals. This has caused a huge glut of materials that are actually locked up in these warehouses. The scenario is going to stay the same until there's a huge change in interest rates. And given the negativity that I was spouting off from 2 pages ago, I don't see that happening here. I mean, is it 2014? Is it 2015? We need to see some growth before rates go back up.
So you're saying they're going to hold on to that material until the interest rates go up and make it too expensive to hold on to?
Exactly. The gist of the whole trade, and it is very confusing. It's actually taken me like a year to really grasp and get my head around it. What happens is these banks, or some of them aren't banks, but financial institutions, are somehow able, and I think it should be illegal, but it's not, to own these big warehouses. They can cram material in there, and they get paid a rental charge per ton. It's 40 cents a ton, 50 cents a ton, whatever it is. They're collecting rent checks for this material in there. But the way the rules are written is that you can't load out material fast enough. You can't get it out in a timely fashion. So it's like having a whole bunch of tenants in there locked up that are all paying rent. How are they able to do that with their own material? They're buying they're either getting a deal from a supplier, or they're getting it at the spot price and looking out at the forward curve, and they're hedging it through a hedge provider. And if that curve is in contango or upward sloping, if they can buy it at 2,000 and forward sell it at 2,200, they're basically able to collect a rent check and lock in a spread. And they're only able to do that because they have access to very cheap money. If we were in a 3%, 4%, 7% interest rate environment, this would all be gone.
Okay. Tony, one of the folks said perhaps companies would engage in hedging if they had a better understanding of how it works. Does Tony have a presentation or a document that explains how it works to those who do not understand it?
Absolutely. It usually takes a few iterations, but if you'd like one or something more targeted, I'd be happy if you just reach out to me directly, and just a quick phone call, I can put something together. The nice thing about what I do usually is just working with companies. Everybody has different needs, so some things might make sense for some companies, and they might not make sense for others. Was it about brass, you said?
No, it was just in general. It was when we were having the discussion about why companies are relying on the steel service centers to do the hedging for them rather than implement their own programs.
Yep. Okay. Yeah. No. If my contact information is here at the back, but I'd be more than happy to walk through a couple examples and try and make it easy for you.
Okay.
Okay. So back to aluminum. Where was I going with that long ramble? So I apologize. The issue is it's easy to get material in, really hard to get it out. What it's caused is a really expensive premium to get the material. So the LME price on a conventional standpoint is pretty cheap. I mean, if you're around $2,000 to $2,100 a ton, you're taking a look at the last 5 or 10 years, and almost anybody would tell you, yep, you know what, I'd like to lock up that price. I'd buy that price for the whole year or for a couple of years. What's happened is this premium, what you're getting from like your Alcoas or from your Kaisers, whoever's producing your physical material, they're able to sell with this premium above the LME price, the normal index price. So instead of being a traditional like 4 to 6 cents, and even at the beginning of this whole mess, it was about 6 cents in January 2011. Right now, it's at 12 cents a pound. I mean, you're adding a significant percentage to your purchase price that was not there before. Most people The not active hedgers have felt relatively helpless because they're able to hedge with the LME and they lock in a good price and that price hasn't moved, but they're still feeling the pain on the procurement front because you're missing your mark by 10%. The good news is there actually is a way to hedge that, and we hedge that for a large handful of our clients that have been hedging for a couple of years. We've seen an increased demand both from them and from other prospects into looking into hedge the all-in price, the Midwest transaction price, or just the premium portion. So it's important to know that it is out there. If you're dealing with this issue, definitely feel free to reach me directly, and it is out there. Some folks are skeptical of the market existing, but it's something that's relatively common. The good news, not to be all negative here, if you go on to the last bullet point, really, we have some strong demand and some good positive things in the overall aluminum space. Really, with this focus of de-weighting, 2-3 years ago, you hear about auto de-weighting, and that was a good thing, and putting more aluminum into vehicles. We've really seen that step up. But I've been reading a lot of articles lately about the aerospace industry and what that's going to mean for aluminum. Those are really the primary bright spots in 2013. Interesting piece is those new carbon fiber planes. I never knew this, but the underbelly and all the interior actually involves twice as much aluminum as before. So even those are helping drive demand. And there's a 6 to 10 year backlog depending on who you talk to for planes. So that I think will help prop up aluminum pricing. Maybe not in the short term, but in the decades ahead, I think we're going to see demand ramp up quite a bit. Right now, we're up to about 345 pounds of aluminum per vehicle. That's a generic vehicle. It can be as high as 700 pounds. The F-150 development and the Range Rover development, both very exciting for anybody in the aluminum space. And I think that's going to continue, that we're going to see that keep going up here over the next few years.
At any point in time in the near future, do you see supply being an issue?
Right now I don't. We haven't had much curtailed. I know that Rusal put some measures in place to kind of tamp things down. But I do know that, Alcoa, the guys domestically here, are still going at a pretty good rate. It's just this premium idea of having, the supply is there. So either the rules have to change at the warehouse, or that's pretty much it. We're not getting I don't think you're going to have anything like we see in the resin space, where all of a sudden you have an actual dramatic shortage. The material is there, it's just tougher to get, or it's slower to get than it used to be.
Where do you see pricing going for aluminum and the aluminum premium for the rest of 2013?
Most folks are calling for it to stay between this 12 and even 13 cent range, which is 2 to 3 times what it used to be. I don't expect it to be coming down, just because it's really taking a look at interest rates. Unless you think that interest rates are really going to skyrocket, this premium is going to hover at these high levels. The overall LME piece, the majority of your aluminum cost, I think will be a little bit easier to manage this year. And you're probably looking at like a $2,300 to $1,900 band, whereas a year or two ago we were talking like a $1,900 to $2,800 band. So more of a problem with the premium than with the actual LME pricing.
Okay.
And in terms of what I think the sticking points will be for the year, that's pretty much it. But if you have any specific questions, I know I didn't address copper specifically, but I wasn't sure what the audience was going to be, but I'd be happy to grab any specific questions that anybody has.
If anybody has any questions on any specialty materials or any copper, I'll put them in and I'll ask. What's the Wells Fargo outlook for the economy? Is boom or bust?
I don't know if it's Wells or mine. Wells Fargo itself is actually quite positive, given the moves that we've made. In the U.S. housing market, we tend to be very, proud to be a domestic bank and pro the U.S. and we're really standing behind, homeowners in the U.S. So, from that stance alone, and being as big a part of the housing market as we are, I certainly think that they're thinking a positive return in 2013. And I don't know if it's so much as basing it on, you know, how individuals are doing or individual employment, but taking a look at the steps that the government's taken, they've really not slowed down too much in terms of what they're putting into the economy.
Have you seen any volatility in pricing that's been driven by the conflict minerals or conflict country regulation? It's kind of driving people to track where they've made their purchases back into the earth?
The only space that's crept in that I will read about or I will come across would be in the tin space. If you're doing any tin or tin plate hedging, you know, that's certainly something to watch. Not as much in the precious metal space. That may be a concern for gold if you're physically sourcing gold or for platinum or something like that. But tin is really the only place where you can get caught and see one of these 30% jumps.